The crypto market just keeps getting hammered. And honestly, the pressure isn't letting up one bit. There's absolutely no relief in sight whatsoever. And here's something that might shock you. The S&P 500 is actually down on the year right now. I mean, the whole sky seems to be falling around us. Nothing makes sense anymore in this world we're living in. It's like cats are becoming best friends with dogs. What the heck is actually going on here? What's really causing all of this chaos? Is the crypto market actually finished for good? And the big question that's probably keeping you up at night, is XRP ever going to finally land on the moon? These are massive questions, I know, and I completely understand why you're asking them. Well, that's exactly what I'm going to dive deep into and address in this video. And I want to tell you right at the outset here, everything that you're seeing unfold right before your eyes is completely explainable. None of it is destroying our incredible opportunities to become wealthy by investing in crypto, and specifically XRP, which of course remains the absolute best coin on the entire planet for anything payments related, and then some. Right now, XRP is sitting at $1.91. Just look at how far we've fallen from those recent highs. Bitcoin is currently at $89,505. Yeah, the market hasn't exactly been red hot over the last 24 hours, that's for sure. Here's what happened. XRP actually dropped as low as $1.88 at one point. Bitcoin got hammered down to as low as $87,847. So what actually sparked all of this sell-off? Well, here's what I want you to know. This actually isn't something that's crypto-specific at all. We're taking it extra hard in the shorts though, because as you well know, just a few months ago, we experienced a true black swan event in crypto. That October 10th liquidation event really shook things up, and we were just starting to recover from that. Then there were some geopolitical events, let's call them, that unfolded and hit all sorts of markets in different ways. Here's the first major factor, and I actually talked about this in great depth in another video, so I won't go super deep here, but I definitely want to cite it for you. I'm sure most of you have heard about this by now, but here's the headline that's been making waves. Markets plunge as Trump reignites fears of a trade war over Greenland. That's a brand new headline that just dropped. That headline specifically came out on Tuesday. Then there's this other major factor. Here's the second key reason behind all this chaos. Global bond markets shaken by Japan sell-off. This is the other critical thing that's triggering markets on a massive global scale. And you know what? Sometimes things actually do happen in the real world that genuinely move markets in a big way. Now, I want to be clear, I don't think that's the case for most moves in most markets most of the time. I honestly think that markets will just move at some point for their own reasons. And there's this whole follow the leader mentality, like lemmings following other lemmings off a cliff. Then whatever happens to be going on in that particular moment gets assigned as the official reason why such and such happens. But in this specific case, it's very clear that these events are having a serious, measurable impact on everything. Here's the reasoning behind all of this. A significant jump in Japan's borrowing costs to all-time highs sent ripples through major bond markets on Tuesday, colliding head-on with fresh anxiety over tensions, and really underscoring investor sensitivity to rising fiscal pressures and these incredibly heavy debt loads. Japanese 10-year government bond yields absolutely surged, almost 19 basis points in just 2 days. That's the sharpest rise we've seen since 2022. Meanwhile, 30-year yields posted their biggest daily jump since 2003, as investors brace themselves for increased government spending across the board. Now, here's something else really important to note. Tuesday was actually the first day that we had United States stock markets open, ever since the news broke a few days ago that Trump was going for what I like to call Tariff Nonsense 3. The market certainly responded to that news in a big way. Various markets responded in their own unique ways too. For example, the S&P 500 dropped over 2% on Tuesday alone. That's the first full trading day it's been open since all these shenanigans started unfolding. The Japan news certainly didn't help matters at all. The Russell 2000 was down around 1.21%, if I remember correctly. Those small cap stocks took a real beating. But here's something I'm actually very happy to see. Gold was doing well, because gold is what we call a risk-off asset. Crypto and stocks are considered risk-on assets, while gold and precious metals are risk-off. So here you can see gold up about 2.5% at $4,865 per ounce. Well, go figure. That makes perfect sense. But here's the thing. This is going to be a flash-in-the-pan situation. Just fast forward some amount of time, and you won't even remember this happened. The market will completely forget about it, and everything will recover like it always does. We are certainly not done here, folks. The absolute best is yet to come. Here's a great post from Charlie Bolello. He's the chief market strategist at Creative Planning, and I think this provides an excellent reminder for times when everything is red across the board. He wrote, "The S&P 500 fell 2.1% today, the biggest daily decline since last October. This is completely normal behavior for the stock market. The average year since 1928 has seen 29 large declines greater than 1%. No risk, no reward." Now, since we're operating in crypto land, we know that those percentage moves, while they might seem intimidating if you're coming from traditional finance, those are basically moves for ants. They're so incredibly tiny in our world. That is absolutely nothing compared to what we've experienced. We've had 60, 70, even 80% drops in a single afternoon on rare occasions. It can get really severe in crypto land, and we all know that. It's still completely regular to have even 30% pullbacks in a single day. Not that it happens all the time, but it can definitely happen several times per year. So that type of volatility is certainly normal here in our space. And it's honestly just so cute that these people in traditional finance get all hot and bothered about a 2% move. We're just sitting here in crypto land, like, yeah, what's new? What's up now? That kind of stuff doesn't even faze us anymore. Now, of course, crypto did go down today because everything got hit across the board again. Crypto is obviously a risk-on asset, but it's not exactly the end of the world here, folks. When the market goes down for what I consider stupid reasons like this, and there are emotional speculators getting all worked up, that actually means there's real opportunity out there for smart investors. But then there's this post, and I saw a number of people posting stuff like this, and it's honestly just the most ridiculous thing I've seen in a while. This guy named Ted Pellis wrote, "1 year ago, the first pro-crypto president took office. Since then, Bitcoin is down 12%, ETH is down 5%, XRP is down 40%, Solana is down 50%, and other large caps are down 50 to 60%. Mid caps are down 70 to 80%, small caps and memes are down 90%. Thank you, Mr. President." I'm guessing, and I think I know which way he leans politically, because it completely depends on the time frame you're looking at. So I simply responded and wrote, "Now run the numbers from election day, because if you run the numbers from that specific window, the market is up substantially despite this recent event." Let me tell you something important. Although it is true that the Tariff 2 scare in October is what got the market moving initially, the actual Black Swan event was thanks to Binance. I've gone through that in great detail in previous videos, so I won't rehash it all here, but that was a failure of the actual crypto asset class that was sparked in large part by technical issues. Fine, you can say that the Trump news triggered the initial reaction, but it was Binance specifically and their APIs failing at a crucial time that really caused the damage. Market makers couldn't hedge their positions properly, and everything just fell apart from there. It damaged market makers to a ridiculous degree, and that was a true Black Swan event. That's not related to Trump policies. It's completely unrelated to any political factors. So I'm just wondering, if you fast forward some amount of time when the market is significantly up during his presidency, because he's still got another 3 years, is this guy going to come back and post something like X amount of time since the president took office, Bitcoin is now up so much, XRP is up this much? Is he going to do that? Because I'm not going to hold my breath for that kind of intellectual honesty. But the actual numbers from election day are quite substantial and tell a very different story. Here you can see what the real numbers actually are. Somebody named Leighton Lost responded to that post, and he had ChatGPT pull the actual data. If you want to pause here and look at it carefully, I didn't personally fact check this, but it's probably correct since it was pulled from ChatGPT. XRP is up around 400% even right now, compared to where it was before the election. Obviously, things are very, very good from that perspective. But nothing ever goes up perfectly in a straight line. That's just not how markets work. If you're going to arbitrarily pick dates, the market had already run up significantly leading into inauguration, and then you're going to arbitrarily choose that as your key starting date, and then fast forward exactly 1 year from there. Well, the market already ran up substantially because of the election news and anticipation. So cherry picking that specific date is just intellectually dishonest. It's just completely stupid when you think about it logically. Here's an interesting post from somebody named Cool Madrid, who had a direct question for chart analyst Credible Crypto. He wrote, "Are we worried about the recent drop, seeing more and more people calling for under $74,000 and lower?" Credible Crypto is definitely not worried about this at all. In fact, here's exactly what he had to say, and I think you'll find this perspective really valuable. People have been calling for $74,000 and lower for literally over 5 months now. It has been nearly 3 months now since the bearish monthly MACD cross. And it has been 2 full months since we got our bearish 50-week simple moving average cross, both of which were supposed to send us swiftly below $74,000 and into a more significant bear market. Yet here we are sitting at $90,000 with $74,000 still completely untapped. Maybe it happens, maybe it doesn't. But nothing has actually changed on the higher timeframes thus far. And as I've said, for literally months now, there is absolutely 0 point for me to change my bias until or unless something actually does break. So no, I'm not worried one bit. The show goes on. That's exactly the right mindset to have. That's the right way to approach this market. You don't change your analysis until something actually breaks, and then you would address it accordingly. That simply hasn't happened yet. And isn't it interesting to consider this? Those bearish markers that he cited there happened 3 months ago. What occurred 3 months ago? Oh, that's right, there was that black swan event I mentioned earlier. So that happened, and there was indeed a black swan event. Nobody could have possibly predicted that specific technical failure. That's literally impossible by definition. You can't know what a black swan event will be ahead of time. That's exactly how that concept works. The black swan event did happen, and it was fundamentally a technological failure with Binance. Nobody knew that was going to happen. Binance sure as hell didn't want that to happen, but it absolutely did happen. That sent things spiraling throughout the entire fourth quarter. That is unquestionably what occurred. There was essentially mechanical selling happening every single day. We can look throughout November and December during that same time period. Every single day, there was very obvious unwinding happening. It was crystal clear that this was an unwind because a market maker, or maybe multiple market makers, were being forced to sell. Very obviously, this was the case, right? Given that we know this happened, I mean, do you think in hindsight it makes sense to believe that just because we saw those bearish indicators, it meant we were entering a bear market? Did that actually make logical sense? Or was it because we had a black swan event that put us in an outlier situation? I think it's clearly because we had a black swan event that created an outlier situation. That's exactly why you saw those indicators show up on the charts. That's it. Pure and simple. Then there was also this follow-up from Credible Crypto that I found really interesting. He said, "The last time I shared this chart was in April of 2024, when I pointed out that for the first time in 7 months, long-term holders had shifted from selling the pump to buying the dump. This shift in long-term holders from net distribution to net accumulation marked the bottom of our 7-month correction. We made a marginal lower low following the shift by less than 3%, then saw a full-on reversal to new all-time highs." Now, I want to pause and note something important here. He posted this just a few hours ago. It's currently 1:02 a.m. as I'm recording this video, and he posted this at 10:14 p.m. So less than 3 hours ago. He is completely unfazed by anything that has happened at this point. He's seen this exact pattern before, and he's confident in what it means. He continued, "Once again, for the first time in 7 months, long-term holders have shifted from being net sellers to net buyers. As I've said for months now, I do believe we are in the process of forming a higher low before continuation of the uptrend that we have been in since $15,000. The data below suggests our reversal may be just around the corner." Now, let me explain why I'm taking time to highlight Bitcoin analysis, even though honestly, Bitcoin is just fine to me. It's one of my largest holdings because I've been holding it for so long, and it's appreciated tremendously. But I'm not particularly excited about it as a project. I don't really get thrilled talking about Bitcoin specifically, but it matters tremendously to you and me because we're XRP holders. As Bitcoin goes, so goes the entire market. You absolutely need to know and should be interested in what happens to Bitcoin specifically for that reason. I care deeply about what Bitcoin does because of the direct implications for my altcoin holdings, especially XRP. Credible Crypto believes that number will go up, and he has made it very clear that he thinks XRP is going to hit at least $10 this market cycle. He actually thinks XRP is most likely to peak somewhere between $20 to $30. He is not changing his tune or backing down from these predictions because the invalidation points that he has set, those invalidation points simply haven't been triggered yet. So he's sleeping easy and staying confident in his analysis. Here's another great post from chart analyst Psychedelic. And this is a fantastic post because so many people are absolutely freaking out right now. That's exactly why I want to highlight this perspective, and I do have a bunch of XRP-specific analysis coming up too. I've got insights from 6 different XRP chart analysts, so please hang with me. I'm going to get to all of that, I promise. This is focused on Bitcoin. And he said, now I see many accounts saying, if we lose $89,000, we are completely done for. No, we're not. We could move exactly as I've pictured below and still be highly bullish. You might not want it or like it, but that does not make it anything other than what it actually is. Bottom formation that is cleaning up liquidity before running much higher. Trust me, it is far better that we take out the lows before we expand much higher rather than going back for them from $110,000 instead of now. Anyone who says we can't drop to $80,000 and slightly below for liquidity hunting and still be bullish is completely wrong. It is actually the cleanest and healthiest way for us to expand much higher. Look at any previous low formation and you will see exactly this pattern. Does that mean it will 100% happen? No, but you absolutely need to be prepared for all scenarios and know how to navigate them properly. Otherwise, you end up making the worst possible decisions at the worst possible times. I absolutely love that perspective. It's an honest acknowledgement that Bitcoin could indeed go lower, but he's not necessarily predicting that will happen. He's simply saying that even if it does, it doesn't break the overall bullish structure. That message is completely in line with what chart analyst Credible Crypto has been saying. It's just fascinating to me that some analysts really get how markets work, but most honestly don't. I know this because I've been around long enough to observe patterns. Most analysts who are doing technical analysis don't really understand the bigger picture. It would be like if I suddenly decided to become a chart analyst. I'm not a chart guy at all. Imagine if I just started putting out charts and asserting things with very strong, convincing language, but I didn't actually know what I was talking about. Just imagine I did that and started drawing random lines on charts. That's essentially what most chart analysts are doing out there. Now, I personally don't want to be a chart guy because, frankly, it would bore me to tears. I'm way more interested in following intelligent, thoughtful individuals who actually have proven track records with charting and then tracking dozens of them literally on a daily basis. Then I look for consistent patterns amongst that entire dataset, with the dataset being individual human analysts who are genuinely good at technical analysis. What you can discover through this approach, and I've demonstrated this many times on my channel, is that if you follow the right people, you can often identify when something significant is actually likely to occur. Because when out of nowhere, you see tons of skilled analysts who don't necessarily even know each other personally start saying the same or very similar things, that's a powerful signal right there. Almost always, and I'm talking about a very strong majority of the time, when I discover those instances, whether it's about crypto broadly, Bitcoin, XRP, or whatever it may be, whatever they collectively think is going to happen, usually does happen. Not always, of course. There are definitely exceptions to this pattern, but it holds true most of the time. It's just fascinating to observe this phenomenon. You find truly good analysts like Credible, Crypto, and Psychedelic who understand that prices can go lower without breaking the overall bullish structure. They know it doesn't invalidate anything on the higher timeframes. They believe, based not just on technical analysis, but on numerous macro factors, historical perspectives, chart formations, and all sorts of additional reasoning that we are going significantly higher before this cycle completes. I absolutely buy into that general concept, 100%. The evidence is just too compelling to ignore. Here's an interesting post from chart analyst Kellio. He's talking about Ethereum here, which historically has been the catalyst that kicks off alt season. But I really like this particular sentence, and that's actually why I'm highlighting this specific post. This was from last night, Tuesday evening at 6:38 p.m. Regarding Ethereum, he simply wrote, "You'll all be bullish again by next week." I don't know if that exact timing will prove accurate, but here's what's funny about human psychology and markets. People get completely consumed by despair and negative emotions. And then sometimes it literally is just 1 day, 2 days, 3 days, or maybe a week later when the market does rebound to a notable degree. Then everybody becomes all cheery and optimistic again, like nothing bad ever happened. Please stop letting the crypto market dictate how you feel emotionally. Stop doing that for your own mental health and sanity. You should not allow your emotions to be completely controlled by market movements, especially when you should logically understand that you're invested in the most volatile asset class on the entire planet. In the history of our species, there has never been an asset class more volatile than cryptocurrency. But even considering that extreme volatility, we literally have over 17 years of historical data that tells you clearly you should actually expect this kind of behavior. It's completely normal, but it's ultimately okay because the long-term trend just keeps moving up and to the right. Over 17 years of solid data should put you at complete ease. So when the market does exactly what history tells you it should do from time to time, which is to say, drop significantly, you should not become fearful when it does what you know you should logically expect it to do. You should absolutely expect this to happen periodically. Did you somehow think that because you bought a particular cryptocurrency, that specific cryptocurrency or the whole market would never go lower again after your purchase? Like you magically bought at the absolute bottom? You thought you were some kind of wizard who bought at the perfect bottom and now it's just never going down again? That's just not going to happen. It's simply not how any of this works. Here's a post from the excellent analyst Mads, focusing on the ETH BTC chart. I really like this analysis because he's highlighting Bollinger Bands and making some important historical comparisons. He said, Ethereum is repeating its 2020 pattern ahead of that massive breakout. It's been months of grinding against and attempting to break the 20-month moving average before the inevitable upside breakout and successful backtest, which sent Ethereum absolutely flying, all while Bollinger Bands continued to squeeze tightly. So he firmly believes that this time is not different from previous cycles. It looks essentially the same as the last market cycle, and it's still unfolding just fine according to historical patterns. This is a guy who, by the way, accurately called XRP's breakout, this market cycle back in 2024. He's got a pretty damn good track record when it comes to these calls. Here's a post from chart analyst Mustache focusing on the Total 2 chart, which represents altcoins. Basically, everything excluding Bitcoin. He wrote, "Did you know that Total 2 has been on a clear upward trend for more than 1.5 years? Each sideways consolidation period has lasted approximately 98 days before a new upward trend began. We're now just 3 weeks away from this pattern happening again." Look, I just cannot relate to people who think it makes any logical sense to believe that we're currently in a bear market. Sure, you can cherry pick 1 or 2 indicators that sometimes appear in bear markets, but what about all the other numerous indicators highlighted by other skilled analysts that show things that simply don't happen in bear markets? These bearish analysts out there are incredibly selective with the information they choose to share with you because they have a predetermined bias. They've already decided on their narrative, and then they will do absolutely anything they have to do to keep cramming that narrative down your throat. Here's what I want to know. Ask them about their macro thesis. Go ahead and ask them that specific question. I'd really like to hear their answer because they never seem to have a comprehensive macro thesis. They never have one. They don't understand the fundamental drivers of why markets move the way they do. They just see a couple of things on charts that might look similar to what happened in previous bear markets, and they jump to conclusions. Oh, bear market. Oh, okay. Well, I'm definitely not convinced by that approach. I'm not buying it at all. You're simply not using all the available pieces of the puzzle to put together the complete picture. So no thanks to that kind of analysis. Take a look at this fascinating post from chart analyst Javon Marks. This particular post is from April 20th of 2024. So XRP was trading at just 52 cents at that time. I highlighted this type of analysis throughout that year. I may or may not have shared this exact chart at the time, but the pattern was clear. You could see that XRP was obviously coiling up in a massive triangle formation. Look at this carefully. You can see the same exact pattern that was happening leading up to the 2017 breakout. It was the same type of technical setup developing. At that point, I kept saying throughout the year, I don't know exactly when XRP is going to break to the upside, but it's clearly coiling up. The range within which it trades is becoming more and more narrow as we approach this apex point. You should absolutely expect it to break out dramatically when we reach that point. And that's exactly what happened. It absolutely happened in November of 2024. We had to wait quite a while for it though, and that felt like an eternity at the time. If you were there holding through that period, you know exactly what it felt like for people. It just felt like it was never going to happen. Another month passed, then another month, then another month, and so on and so forth. People were getting incredibly frustrated and impatient. But then it finally happened, just as the technical analysis predicted. We're in another one of those similar moments right now. This chart I'm showing you is from almost 2 years ago. That's when Javon originally posted this analysis. He reposted that same chart just yesterday afternoon at 1:41 p.m. with an important update. Here's what he wrote. After the attached post, highlighting XRP's coil nearing breakout points, prices broke out, climbing over 580% to new all-time highs. But today, there is looking to be much more left in the tank. The minimum breakout target for this setup is between $15 to $20, which from current levels represents more than 600% upside potential. Think about the implications of that analysis. XRP was down to $1.89 when he posted this update, and it doesn't change his perspective at all. You have to understand, we are simply trading within a range right now. The fact that we're toward the lower side of that range compared to where we were the day before doesn't matter fundamentally. It doesn't change anything about the bigger picture. This is completely normal crypto behavior. When the crypto market behaves exactly like the crypto market has always behaved, don't freak out just because it's behaving like the crypto market. That's a pro tip right there, seriously. Here's a post from Chart Nerd that I found interesting. He said, can XRP fill in this wick and tap that $1.80 sell-side liquidity pool to enable the send back above $2 and beyond, please? So $1.80 is another key level he's been highlighting. We were all hoping that the $2 level would hold a strong support, and he shared several posts hoping that might be the case. But if we do hit that $1.80 level, it would just flush out even more weak hands and make it even less likely that we'll revisit those lower levels in the future when we finally do move significantly higher. He's not changing his overall bullish perspective on this at all, and he absolutely believes we are in a bull market, just as I sure as hell do. He also shared this important post just yesterday afternoon. XRP being above the monthly super trend indicates sustained bullish momentum. Red trends have historically indicated bear markets, and green trends indicate bull markets. We're currently above the green trend line. Again, I just do not buy into the narrative that we're in a bear market. Not at all. If I look back on this analysis in the future, there are only two possible ways that I could be wrong about this assessment. I'm actually going to talk about this in much more detail in my very next video. There are exactly two ways this bullish scenario could fail to materialize. Either liquidity doesn't expand significantly, in which case you wouldn't expect Bitcoin and the crypto asset class to perform well. But a major part of what I'm expecting is that liquidity is going to increase tremendously throughout this year. If that doesn't happen as expected, then I honestly do not believe that Bitcoin and crypto will have the bull market I'm anticipating. We would likely enter an actual bear market instead. If we're not going to see an expansion of liquidity at this point, or if it's going to peter out somehow, then we won't see the rally I'm expecting. The only other way this could go wrong, and I do not think this is remotely plausible, but it's theoretically possible, is if we do have the liquidity expansion I'm expecting, but for the first time in history, despite this increased liquidity, which typically increases people's risk appetites and drives them to invest in everything, people invest in riskier assets in the stock market, they move further out on the risk curve into small cap stocks like the Russell 2000, But for some inexplicable reason, none of that increased liquidity flows into crypto for the first time in history. That's the only other scenario where this could fail. But that makes absolutely no sense because the crypto asset class has proven to be the most liquidity-sensitive asset class on the entire planet. So you're telling me that the most liquidity-sensitive asset class on Earth is somehow not going to respond to an increase in liquidity for the first time in its history? I don't think so. But if that somehow happens, then I'll just have to admit I was completely wrong about that assumption. It would have to be one of those two specific scenarios for my analysis to be incorrect. What else could it possibly be? I just don't believe that either scenario is likely this year. It simply doesn't make sense to think that liquidity won't increase substantially. I'm going to dive much deeper into this topic in my very next video. There are so many compelling reasons to expect increased liquidity. I want to talk specifically about the impact of inflation because it actually does something that benefits people who hold financial assets. I'll just leave it at that for now, but I'll explain it thoroughly in my next video. Here's a post from chart analyst Steph is Crypto that provides important historical context. He says, this XRP chart highlights a pattern that has repeated in every single major cycle. The white line represents the 50-week simple moving average. Each cycle follows the exact same sequence. Price breaks below the 50-week SMA, then retests it from underneath. The retest fails, and a larger decline follows in the months after. When price is below the 50-week SMA, the long-term trend has turned bearish, and the moving average becomes resistance. This is not a prediction, but simply repeated market behavior. That's why the 50-week SMA has been one of the most important cycle indicators for XRP. That's another very reasonable consideration to keep in mind. What we're seeing right now is not markedly different from anything we've experienced in previous cycles. It really isn't. We've seen this exact movie before, multiple times. People are just thinking it's a completely different movie when it's actually the same one. I'm telling you, it absolutely is the same pattern repeating. Here's a post from Crypto Wizard focusing on the XRP BTC chart. He said, XRP patience. The lesson of this cycle when it comes to XRP is that patience truly pays off. XRP has been trading within a wedge pattern for an entire year. A breakout will coincide with Bitcoin dominance rolling over. Such a breakout would send XRP absolutely parabolic. Look, in my mind, and this is purely my opinion, there's simply no world in which that breakout doesn't happen, assuming liquidity indeed increases as expected. And I don't think there's any realistic world where liquidity doesn't expand significantly. That's the key assumption here. Unless there's some scenario where somebody made serious calculation errors, and we should actually expect liquidity expansion to occur later than anticipated. I mean, I suppose that's theoretically possible, but I find that highly doubtful because we have sufficient public data to indicate when major events will occur. For example, we can track when government debt will need to be rolled over, which is a primary driver of liquidity expansion. There are multiple drivers, but if you want to identify the biggest single factor, that would be it. Then we had this analysis from chart analyst C, Greg Crypto, focusing on the XRP USD chart. He said, XRP range reality check. Weekly plus 21 EMA structure, still completely intact. Upper resistance at $3.40 to $3.60. Lower support at $1.85 to $1.95. Price is currently sitting near range lows. So here's another skilled analyst who says that, at least right now, nothing fundamental is broken on these charts. He continues, 21 EMA weekly is sloping down, acting as resistance. Price is still below it. Short-term momentum is admittedly weak. But then he provides this crucial insight. I expect a liquidity sweep, not a confirmed breakdown. A wick below about $1.85 would represent normal liquidity behavior inside this range. Completely normal liquidity behavior inside a trading range. He then clarifies a weekly close below about $1.85 would equal structural failure, and cycle risk would increase significantly. It would be time to prepare cash for much lower buy opportunities. Until that specific scenario happens, we are still ranging and holding structure. Not broken, not in macro failure. My stance remains completely unchanged, still bullish, still holding, haven't sold anything, and the structure remains valid. I feel exactly the same way. Obviously, I share that exact sentiment. Nothing looks broken from a macro perspective, and you don't have to be a technical chart analyst to understand that. Even though I'm not a chart guy myself, I've been following enough skilled chart analysts for the better part of a decade that I can understand what they're talking about. It doesn't mean I can create charts myself, but I can definitely comprehend their analysis. When I see the same types of conclusions from tons of really good chart analysts, I find that extremely persuasive. Why shouldn't I? Of course, I should pay attention to that consensus. My life experience tells me that when you have a large number of talented analysts saying roughly the same thing about market conditions, they're almost always correct in their assessment. I know that's true based on years of observation. That's exactly why I love putting this type of content together for you. That's why I love tracking all these analysts and making these videos. This way, you don't have to spend the time doing all this research yourself. Trust me, it does take a substantial amount of time to track all these different perspectives, but I genuinely have fun with it. For whatever reason, this stuff just lights me up and energizes me. I've been passionate about this for years. I know at the core why I'm so passionate about this is because I have so much skin in the game personally. I have tremendous amounts invested, and this is genuinely transformative for me on a personal financial level. I'm sure so many of you are in exactly the same situation. That's why it's so much fun to track all this information and share it with fellow investors. We're all in this together, working toward the same goal of financial independence. Then he shared his macro view on gold, which I found interesting. He said, "I do not expect XRP to fully break its current structure before gold reaches its top. I remain in the camp that January is likely when gold will peak." That's an interesting perspective that ties together multiple asset classes and their relationships to each other. It shows how interconnected all these markets really are, and why it's important to consider the bigger macroeconomic picture when analyzing any individual asset. This is exactly the kind of comprehensive analysis that helps us understand not just where XRP might be headed, but why these movements are happening and what we should expect in the coming months.